Hi everyone, and welcome to this week's Macro Outlook. My name is Chris Tubby. I'm just going to give you my view on what I've seen last week and what I expect coming forward as we progress through 2024. Well, at least the first half of it anyway. So, okay, let's get going. Okay, so obviously last week we saw stocks continue to rally, making record highs. Again, it's just the titans, the magnificent ones. I wouldn't say seven at the moment, but maybe five. And of course, that happened without any major data to deter the bulls from just keep piling in. As I say, it's just driven by a few stocks: Nvidia, Apple, Amazon, etc. And when you look at it, equities are up 5% in 1 month and 22% year on year. Uh, do they warrant that? I mean, yeah, the US economy is still strong. Are the earnings going to sort of support that? Just not so sure this year. But obviously it's early, so we're only in February, so let's wait and see where things go. Okay, so moving on. So Bitcoin burst through 45,000, actually traded up as high as 48,500 on Friday. That's digital gold, and when we look at gold itself, I mean, it just seems to lack direction at the moment. And to be honest, this is often the way, when the central banks are so active. I traded a little bit of gold over the last year or so, but not as much as I would normally, just because that sort of inverse relationship with stocks just isn't there. So, it has to be a really strong level before I'm going to get involved. And then, of course, we're seeing the sort of the high rates, and we need to remember that while rates are high, that of course gold doesn't pay any interest. So moving on, 10-year treasuries, they were holding steady above 4% again. That chance of an early rate cut seems to have evaporated, quite rightly so. I mean, I've warned week after week, day after day, even in my newsletters, that, for me, it's going to be at least May, June, probably June time before you're going to start to see any rate cuts, especially from the Fed. And of course, if you look at other asset classes, I mean, the softs markets, they continue to rally, the big rallies. I mean, cocoa's up over 100% year on year, coffee 21%, and sugar 26% year on year. So big moves in those. That's where I first started my career, was in those types of commodities. Agricultural products on the other and are down. They're down over 20% year on year. WTI higher again, although nat gas is down 62% year on year, 42% just month on month. Okay, there's a little bit of colder weather in certain areas at the moment, but in Europe, certainly not. And of course, Europe still has those big stockpiles that they had to build after Russia basically cut off the taps a couple of years ago. And the macro outlook hasn't really changed much. Central banks still remaining cautious. They're refusing to cut rates, quite rightly in my mind, too early. Just in case that inflation does jump again. For most, the US surprises with such a strong economy, and it's not really surprising me as I keep warning week on week, month on month. They've still got the strongest economy in the world as far as I'm concerned. And India's probably still ranked second in my mind, and possibly India may end up to be the strongest country this year. So, although some economies may enter a technical recession, it does seem, even though we've had these higher rates, again, as I say, I don't say higher rates, just higher rates. They seem to have been absorbed better into the economy so far than we probably could have hoped for. The biggest risk still just seems to be the geopolitical actions. They just seem to have that potential to disrupt supply chains. And of course that increases the risk of higher price pressures again for commodities. And again, so we could see energy and food inflation higher. It just depends if that sort of Red Sea situation calms down or not. Because all the ships at the moment, or the majority of ships, are trying to bypass sort of the straits there, Suez Canal, because they don't want to get involved. So they're going the long way around Africa at the moment. And just keep an eye on that. That's all I can say. There's pressure on Israel to sort of step back, but they seem as though they want to actually accelerate the process that they're going through at the moment. So, jobs market, it just remains strong. However, that said, job offers do seem to be shrinking. And of course, with inflation well off the highs, for me, it's going to become harder for workers to gain those large wage rises. It's going to be much more difficult to justify them. However, sort of when you look at it again, most new jobs that are being created are part-time. And I think really it's going to be March onwards that we're going to start to sort of see the real employment situation. And it wouldn't surprise me to see NFP start to go a bit lower. Next week there's plenty of data out, especially in the UK, but also sort of we're going to see inflation data, some retail sales. Inflation wise, we're going to see CPIs and PPIs coming out. Another area of concern for me is commercial real estate. That does continue to sort of be a focus, and of course that's not just on China anymore, but that's spread to other countries as well. And that's put a lot of emphasis on looking at the bank's exposure now, because well, maybe that's going to be the next crisis. I really don't know, but it's possible. And then just sort of to point out that my new website will be finished hopefully by the end of this month. It's getting closer. Just added some really good, exciting stuff in there at the moment. There's going to be a members section, members only section. It's just going to be sort of offering exclusive content. And I am sort of now taking workshops and course bookings into April. And I've just got one sort of long-term, sort of monthly mentoring space left. So if you're interested in that, just look for my details at the last slide. And well, most of it really, to be honest with you, I classed it there. And of course, that's going to give you the details. I'm always happy to have a chat to discuss, what I can do, how I can help you guys. And okay, so hopefully look at the last couple of slides, and then I'm going to move on to the technical analysis. Now, I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. This will help you to discover if trading could be your next career or even just a second income. Otherwise, maybe you're already trading, but there's a few gaps that you'd like to fill in, and I can help you with that because that will accelerate your trading and your performance. And then there's a 1 week intensive course. That's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And, if you've got that in a trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up, you don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market and also on any asset class. I trade them all. And as I say, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this, and this is to help you reach that next level time and again. And I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now, rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers. And as as I mentioned earlier about the trading challenges, if you're looking for a funded trading account, then you can contact me for details just about the ones that I use, or you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice and do that before you risk your capital. So many people come and find me after they lost money, which is sad. They should come to me before. And yeah, so listen, that's it for part one. I hope to see you in part two, where I'm going to do some technical analysis.